Hey everyone. You know how sometimes it feels like when you're trying to get your head around this whole climate crisis thing, it's just like information overload, right?
Yeah, totally.
Reports and news and opinions coming at you from every direction.
It's a lot to process. It can be really overwhelming.
But what if I told you that some of the biggest companies out there, the ones that are often seen as part of the problem,
Right?
could actually hold a lot of the solutions too?
That's a really interesting thought. And it's actually what we're going to be diving into today.
Yeah, we're going to explore the maybe surprising role that multinational enterprises, MNEs, can play in tackling climate change.
You got it.
Hmm.
We've got some new research to dig into, looking at this whole issue through a financial lens.
Plus, we'll bring in some crucial perspectives from lower income countries,
Right.
and we'll take a close look at just how sustainable these corporate climate efforts really are. Are they actually walking the walk or just talking the talk?
Exactly.
Okay, so MNEs, right? Huge global companies. Often, the first thing that pops into your head is massive carbon footprints.
Sure.
Sprawling global operations, not exactly known for being eco-friendly.
Yeah.
But what our sources point to is this kind of core tension. Those very characteristics, their size, their reach, their resources, could actually make them uniquely positioned to really make a dent in this whole climate challenge.
That's the key paradox here. They have this huge impact, but they also have the potential to leverage that impact for good.
So our mission today, if you choose to accept it, is to figure out what exactly those unique advantages are.
Totally.
How can MNEs do things that maybe smaller companies or even governments can't?
Right.
And then what are the incentives that can actually motivate them to take action? Because at the end of the day, they are businesses.
Yeah, that's a crucial point.
Hmm.
What are the levers that we can pull, so to speak, to really encourage them to make a difference?
And last but definitely not least, we'll be taking into account some essential viewpoints, especially from developing nations. The countries on the front lines of climate change, often the ones who are hit the hardest.
Absolutely. Their voices are crucial in this conversation.
All right, so let's jump right into it. First up, those unique advantages.
Okay.
In what ways are these big global companies better suited to address climate change than, say, a small business or even an individual country?
Well, right off the bat, you've got to consider their sheer size and their global reach. I mean, these MNEs operate in so many different countries.
Yeah, with all these intricate supply chains.
Yeah, actually, these massive networks. And that actually gives them a lot of leverage to adopt more sustainable practices.
Okay, so they can kind of push for change across entire industries, not just within their own company walls.
Right, and even influence the spread of environmental regulations internationally. It's kind of a ripple effect.
Can you give us a concrete example of that in action?
Sure. Think about something like the global cocoa industry.
Okay.
So most of the world's cocoa comes from West Africa, which, by the way, is a region that's very vulnerable to the effects of climate change.
Definitely.
Now you've got big MNEs like Nestle, Mars, Cargill, Ferrero.
The big chocolate players.
Exactly. They've got major investments in this whole cocoa value chain.
Right.
And they're starting to make some interesting moves, like Nestle, for instance. They piloted this income accelerator program in Ghana and Cote d'Ivoire.
Interesting.
So what they did was they provided incentives and support to cocoa farmers
Okay.
to help boost their incomes, of course, but also to encourage them to adopt more sustainable farming practices.
So kind of tackling climate change at the root level with the farmers themselves.
Precisely.
Mm.
And it shows how these MNEs can actually drive the adoption of climate-smart agriculture.
Right, right. Not just in their own operations, but right down to the source of their ingredients.
Exactly. And more recently, these big players have even started working together on something called the Cocoa Premium Scheme, which is basically aimed at making sure that farmers get paid a fairer price for their cocoa. So you can see how their influence can literally cascade through whole industries.
Yeah, so it's not just about what they do themselves, it's about the power they have to shape entire sectors.
Right, that's the real takeaway here.
Okay, so size and global reach, check. What's the next big advantage they bring to the table?
Well, it comes down to resources and what we call dynamic capabilities.
Okay, hold on. Dynamic capabilities. That sounds fancy. What does that actually mean?
It's basically a company's ability to adapt, to integrate new knowledge and technologies,
Okay.
to really respond effectively to rapidly changing environments. And MNEs, well, they typically have way more financial muscle and expertise in this area than smaller companies do.
Makes sense.
So they can pour money into research and development developing low-carbon energy technologies, and even transferring those technologies to emerging markets.
And we have a prime example of that, right? The whole rise of wind power in China.
Oh, yeah, that's a classic case study.
Yeah.
So you've got Vestas, this Danish company that makes wind turbines. They got into the Chinese market early on, and the Chinese government, they were really proactive with their policies,
Okay.
offering subsidies, requiring local production, and technology sharing.
Right.
They made it a very attractive environment for companies like Vestas.
Right.
So Vestas adapted their turbine technology to meet local needs, even set up research and development facilities right there in China.
Wow.
And this whole thing really kick-started the development of a domestic Chinese wind turbine industry.
Interesting. So they didn't just import the technology, they helped build a whole industry around it in China.
Exactly. And now China is a global leader in wind turbine manufacturing.
Wow. That's a huge shift.
Right. And it's a perfect example of how M&Es combined with smart government policies can completely transform a global industry.
And turn a recipient nation into a leader.
Yeah, it's pretty amazing to see how these things play out on the global stage.
Okay, so M&Es can act as these kind of catalysts for whole industries in other countries. But what about those really tough sectors to decarbonize? The ones that are really carbon intensive?
Yeah, those are tricky, but that's actually another area where M&Es can play a really important role.
Okay.
Even in these high-emission industries, they often have the resources to really invest in game-changing solutions. So take Maersk, for example.
The big shipping company?
Yep, the global giant.
Yeah.
They've actually gone and created a whole startup that's focused on developing green methanol,
Okay.
which they believe is key to decarbonizing shipping.
Interesting.
Then you've got Cargill, another big player in shipping, but they're taking a different route.
Okay.
They're putting their money into wind-powered ship propulsion technologies.
Wow.
So these are huge, innovative ventures that smaller companies might not even dream of taking on.
Right, too much risk.
Exactly.
They're not just tweaking things around the edges, they're making big bets on totally new technologies.
Right. They have the resources and the risk appetite to really push the boundaries.
And I think we had another example in our sources from the construction industry, right?
Oh, yeah. Wholesome.
Yeah. What were they up to?
So Wholesome is a huge building materials company,
Okay.
and they developed this thing called Durabrick in Malawi.
Durabrick. Okay.
It's basically a low-carbon brick made from local earth, sand, and just a little bit of cement.
Mm.
And the cool thing is, it doesn't need to be fired in a kiln, which is a big deal because it helps prevent deforestation.
Got it.
And of course, it drastically reduces greenhouse gas emissions compared to traditional bricks.
So they're finding ways to make construction materials more sustainable, which is huge because construction has a massive environmental impact.
Absolutely. And it shows how M&Es can take their expertise and adapt it to specific local challenges and come up with these really innovative solutions.
Yeah, that's a great example. Okay, so we've talked about their size and reach, their technology and resources, their ability to tackle those tough industries.
Yeah.
What other advantages do M&Es have in this fight against climate change?
Well, another big one is the potential for collaboration.
Okay.
I mean, think about it. This transition to a low-carbon economy requires massive investments.
Yeah, it's not going to be cheap.
Right. And there's a lot of risk involved. But when big M&Es team up, they can pool their resources and share those risks.
Okay. Makes sense. Strength in numbers kind of thing.
Exactly. And we're seeing that happening more and more, especially in areas like carbon capture, usage, and storage.
CUS.
Yeah, CCUS. You've got partnerships popping up like Total and Air Liquide in France, or carbon engineering and Occidental Petroleum in the U.S.
Okay.
They're bringing together all sorts of different expertise to accelerate progress in these vital technologies.
So it's like each company brings their own special sauce to the table, and together they can achieve more than they could alone.
That's a great way to put it. They can achieve these economies of scale and manage risks that would just be too much for one company to handle on its own.
Okay, so teamwork makes the dream work, even when it comes to decarbonization. And didn't our sources also highlight the role of M&Es in sharing knowledge and raising awareness on a broader scale?
Oh, yeah, for sure. And a really interesting example of that is the Oil and Gas Climate Initiative, or OGCI.
OGCI, okay.
It's basically a group of major oil and gas companies working together to reduce methane emissions.
Interesting. So even within industries that are often seen as the bad guys, there's this collaborative effort happening.
Right, and they've set some pretty ambitious targets, like near zero methane emissions from their operations by 2030.
Wow.
And they're actively sharing best practices, developing resources, even funding things like satellite technology to detect methane leaks.
Hmm.
And what's really cool is that they're also advocating for stricter regulations on methane emissions across the entire industry.
That is surprising. You'd think they'd be resisting regulation, not pushing for it.
Right. It seems counterintuitive, but it actually shows a real commitment to making industry-wide progress.
Yeah, they're realizing that a rising tide lifts all boats, even in the oil and gas world.
Right.
And beyond these big industry collaborations, MNEs are also investing directly in smaller, innovative companies, right?
Oh, yeah, absolutely. Take Rondo Energy, for instance.
Rondo Energy, okay.
They're a startup that's developed this really cool thermal battery technology.
Okay.
It can store renewable energy as high-temperature heat, which is super useful for a lot of industrial processes.
Hmm.
And guess who funded them? Big players like Rio Tinto and Saudi Aramco.
Wow.
So these M&Es are putting their money where their mouth is and helping to bring these cutting-edge clean technologies to market.
So they're not just cleaning up their own act, they're actually accelerating the development of new solutions.
Right, they're playing a key role in fostering innovation in the clean tech space.
Okay, and last but not least, our sources talked about this advantage of internal capital markets within MNEs.
Right.
Can you break that down for us? What's the significance of that?
So basically, M&Es can move money and technology between their different subsidiaries all over the world through their internal financial systems. It's like having their own private bank and tech transfer mechanism. And this can be especially beneficial for developing countries that might not have easy access to capital or face a lot of bureaucratic hurdles.
So it's a way to kind of bypass some of those roadblocks and get funding and technology to where it's needed most.
Exactly.
Okay, so it's clear that M&Es bring a lot of unique advantages to the table when it comes to climate action.
Yeah, they have a lot of potential.
But as we said at the beginning, the right incentives are crucial for them to really commit.
Absolutely.
So let's dive into those now, starting with the private sector instruments.
Okay, so on the private side, we're talking about things like financial markets, corporate governance practices, and even the threat of lawsuits or consumer boycotts.
Right, the things that can hit them where it hurts, their bottom line.
Exactly. And capital markets play a really big role here. Investors are increasingly using their money to reward companies that are environmentally responsible
Okay.
and to penalize those that aren't.
So the more green you are, the more attractive you become to investors.
Basically, yeah. And this directly impacts a company's cost of capital.
Right, how much it costs them to borrow money or raise funds.
Exactly. And the market for sustainable debt has just exploded in recent years.
Really?
Oh, yeah. It reached over $7.5 trillion in 2023.
Wow, that's a lot of money flowing towards sustainability.
Right. And a big chunk of that is green bonds.
Okay, remind me what those are again.
So green bonds are specifically used to fund environmentally beneficial projects.
Okay.
But there's this whole debate about additionality, meaning whether the bond is actually funding new green projects or just existing ones that would have happened anyway.
Right, so are they really making a difference or just kind of relabeling things?
That's the question. But we're also seeing a big rise in these outcome-based financial instruments. Things like sustainability-linked loans and bonds,
Okay.
where the interest rate on the loan is directly tied to the company achieving specific sustainability targets.
Oh, interesting. So if they don't meet their green goals, they end up paying more.
Exactly. It's like a built-in financial incentive.
So it's not just about funding green projects, it's about holding companies accountable for their overall environmental performance.
Right. It's a much more holistic approach.
What about the influence of shareholders? Can they really push companies in a greener direction?
Absolutely. Shareholder advocacy is becoming a really powerful tool.
Okay.
Investors can engage in corporate governance using their voting rights to push for more sustainable practices.
So instead of just selling their shares in a company they disagree with, they're actually trying to change the company from within.
Right. They're using their ownership stake to influence decision-making. And there's research suggesting that this can be more effective than just divesting.
Interesting. So engagement over exit, at least in some cases.
Exactly. And we're also seeing more and more companies linking executive compensation to ESG goals.
Right. So the CEO's bonus is tied to how well the company performs on environmental and social issues.
Exactly. Alcoa was an early adopter of this back in 2013, and now it's becoming pretty common, especially among those big S&P 500 companies.
So it's aligning the financial interests of the people at the top with the sustainability goals of the company as a whole.
Right. It's a way to incentivize change at the leadership level.
Okay, so financial incentives and shareholder pressure are key.
Yeah.
But what about those more forceful private instruments, like climate change litigation and consumer boycotts?
Yeah, those are definitely things that companies take seriously.
I bet.
Climate change litigation has been on the rise globally.
Okay.
There have been thousands of lawsuits filed against companies and governments.
Wow.
And while these cases can be really complicated and drag on for years, they're starting to have a real impact,
Hmm.
especially with the emergence of financial backers who are willing to support these kinds of lawsuits.
Okay.
Like, for example, there's this impact investment firm called Aristotic Capital that specifically focused on backing climate litigation. And we even saw a landmark case where a Dutch court ordered Shell to significantly reduce its carbon emissions.
Oh, really?
Yeah. And that kind of ruling could set a really important precedent for future cases.
So companies are starting to realize that they can't just ignore climate change anymore.
Yeah,
They could face real legal consequences.
exactly. The legal landscape is definitely shifting.
And what about consumer boycotts? Can those really change corporate policies?
Oh yeah, boycotts can be a powerful tool.
Okay.
It's basically collective action, where people choose to stop buying products from companies they see as irresponsible.
Right.
And while the direct impact on a company's profits isn't always huge, the bad press and reputational damage can be a really big motivator.
Yeah, nobody wants to be the company that everyone's angry at.
Right. And we've seen some pretty big examples of this, like Shell deciding to halt its Arctic drilling plans after huge public outcry,
Mm.
or BlackRock, the world's largest asset manager, divesting from thermal coal,
Okay.
or Nestle making commitments to stop deforestation in their palm oil supply chain.
So companies are realizing that they can't just ignore public pressure. It can actually hurt their business.
Exactly. Their reputation and their brand image are on the line.
So it's clear that both public and consumer pressure can have a real impact on corporate behavior.
Yeah, for sure.
Now, let's turn our attention to public instruments. What role do governments play in all of this? How can they incentivize M&Es to take action on climate change?
Well, governments have a couple of main tools at their disposal:
Uh-huh.
carbon pricing mechanisms and green subsidies.
Okay.
Carbon pricing, which includes things like carbon taxes and cap-and-trade systems, is basically about putting a price on pollution.
Right, make it more expensive to pollute, and companies will be more motivated to find cleaner alternatives.
Exactly. And a good example of this is South Africa's Carbon Tax Act.
Okay.
It's a concrete example of a government implementing this kind of policy.
So it's not just talk, there are actual policies being put in place to make carbon pricing a reality.
Right. And then you have green subsidies.
Okay, remind me what those are.
Green subsidies are basically direct financial support from the government for developing and deploying clean technologies.
Okay.
And China's approach to the electric vehicle industry is a really interesting case study here.
Okay, tell me more about that.
So over the past decade or so, China has poured billions of dollars into subsidizing and supporting the EV sector.
Wow.
And importantly, these incentives weren't just for Chinese companies.
Okay.
Foreign companies could benefit too if they set up EV production in China through joint ventures.
Interesting. So they were encouraging foreign investment and technology transfer.
Exactly. It was a very strategic industrial policy.
And did it work?
Well, yeah, China is now a world leader in EV manufacturing.
Wow.
And it's attracted huge investments from M&Es like Tesla, Ford, and BMW.
So green subsidies can be a really effective way to jumpstart new green industries.
Definitely.
But it's also interesting to see how those policies can create complex trade dynamics and competitive challenges down the line.
Yeah, it's not always a smooth ride.
Now, we've spent a lot of time talking about the potential benefits of M&E involvement in addressing climate change,
Yeah.
but our sources also brought in this really important perspective that of low-income countries, particularly Africa.
Right.
What are the key things we need to consider from their point of view?
Well, first of all, it's essential to recognize that African nations are among the most vulnerable to the impacts of climate change.
Yeah, they're often hit the hardest, even though they've contributed the least to the problem.
Exactly. And at the same time, Africa has this huge untapped potential for clean energy.
Really?
Oh, yeah. They've got abundant resources for wind, solar, hydropower.
Mm.
And MNEs could play a huge role in helping to unlock that potential.
Okay, how so?
Well, for example, M&E banks could be instrumental in supporting the growth of climate finance startups in Africa
Okay.
and in setting up public-private partnerships to attract private investment in green infrastructure projects.
So they could be real enablers of sustainable development in a region that desperately needs it. But didn't our sources also point to a kind of dark side of M&E involvement in Africa?
Yeah, there are some serious concerns about the role of M&E banks in contributing to the growing debt burden in many African countries.
Right, the debt crisis.
Yeah. And when these countries are struggling with debt, it makes it really hard for them to invest in things like green initiatives.
So the very institutions that could be funding green projects are also part of the problem.
Yeah, it's a complex and troubling dynamic.
And then there's the issue of capital flight from Africa.
Oh yeah, that's a huge problem. Over the past few decades, trillions of dollars have flowed out of Africa.
Trillions. Wow.
Yeah, it's a staggering amount. And a big chunk of that is linked to the activities of M&Es.
Okay.
Things like trade misinvoicing, profit shifting, aggressive transfer pricing.
Mm-hmm.
These practices essentially drain resources from African countries.
So M&Es have a real responsibility to make sure that their financial practices in Africa are fair and transparent.
Absolutely. They need to be part of the solution, not part of the problem.
It sounds like there's a real need for a more balanced and equitable approach to M&E involvement in Africa.
Definitely. It's not just about extracting resources or maximizing profits. It's about contributing to sustainable development and shared prosperity.
Okay, so we've talked about the potential benefits and the potential pitfalls of M&Es in Africa.
Yeah.
But are African countries just passive bystanders in all of this?
Not at all. A lot of African nations are taking proactive steps to transition to low-carbon economies.
Okay.
Countries like Morocco, Nigeria, South Africa are leading the way with various initiatives. South Africa has its carbon tax, and the African Union has the Nairobi Declaration, which is all about promoting climate-positive development across the continent.
So they're not just waiting for others to act, they're taking charge of their own destinies.
Exactly. And these efforts create a lot of opportunities for collaboration with M&Es,
Okay.
especially in building local value chains around renewable energy.
So it's about forming genuine partnerships that benefit both sides.
Right, it's about mutual benefit and shared progress.
Now, what about those international commitments to climate finance? How do those factor into the African context?
Well, the fact that developed countries haven't met their climate finance pledges is a big problem.
Right. That $100 billion per year that was promised.
Exactly. That failure has been a major setback for developing nations.
Yeah, it erodes trust and makes it harder to make progress.
And there's also this imbalance in how climate finance is allocated.
Okay.
Adaptation projects in Africa often get way less funding than mitigation efforts.
So they're not getting the support they need to deal with the impacts of climate change that are already happening?
Right. And the Paris Summit in 2023 was supposed to address some of these issues, but it's still a work in progress.
So there's a lot more that needs to be done to ensure that climate finance is flowing to the places where it's needed most?
Absolutely.
And our sources specifically highlighted the potential for M&E banks to support climate finance startups in Africa, right?
Yeah, that's an interesting area. We've seen the incredible success of mobile banking innovations like M-Posa in Africa.
Okay.
And there's a lot of potential for fintech startups to address those gaps in things like agricultural insurance and green financing for small businesses. And M&E banks could be really valuable partners in those ventures.
Okay.
They have the infrastructure, the resources, the expertise to really help these startups scale up.
So it's not just about big companies doing big projects, it's also about supporting innovation at the grassroots level.
Right, and that's where real transformative change can happen.
Okay, so we've covered a lot of ground here. We've talked about the what and the how of M&E involvement in climate action.
Yeah.
But our final source really delves into the why. The long-term sustainability of M&E sustainability initiatives themselves.
Right.
Are these just passing fads, or is this something that's likely to stick around and actually make a real difference?
That's the million-dollar question.
Yeah.
And it's a complex one. While the research we looked at makes a strong case for M&E involvement, simply relying on external incentives might not be enough to guarantee their long-term commitment.
Okay, so carrots and sticks might not be enough.
Right. What our other source suggests is that we need to consider both extrinsic and intrinsic drivers.
Okay, break that down for me.
So extrinsic drivers are those external pressures, like stakeholder demands, government regulations, financial incentives.
Okay, the things that push companies from the outside.
Exactly. But intrinsic drivers are about the company's own internal motivations, things like strategic alignment, self-interest, and legitimacy.
So it's not just about being forced to act, it's also about seeing a real benefit for the company itself.
Right. And the most sustainable initiatives are likely to be the ones where those external and internal factors align.
Okay, so it's not just about compliance, it's about actually integrating sustainability into the core of the business.
Exactly. And we see a lot of examples where M&E climate action does align with self-interest.
Okay, give me some examples.
Sure. Nestle's investments in sustainable cocoa farming, that helps secure their supply chain in the long run.
Makes sense.
Wholesome, developing Durabrick, that opens up new markets for them.
Okay.
Cargill investing in wind-powered shipping, that could save them a lot of money on fuel.
So it's not just about being altruistic, it's about finding ways to make sustainability profitable.
Right. And that's really the key to long-term success.
And this is where the whole issue of greenwashing comes in, right?
Yeah. If a company's sustainability efforts are just superficial or for PR purposes, they're not going to fool anyone for very long.
Right. It's got to be more than just a marketing ploy.
Exactly. It has to be deeply embedded in the company's operations and long-term strategy.
Okay, so genuine commitment is key. But we've also seen that stakeholder pressure can be a really powerful motivator, even if it's an external force.
Oh, yeah, for sure. There have been some really successful examples of investor activism pushing big companies to take climate action.
Okay, like what?
Well, there was the Engine #1 campaign that got climate-conscious directors onto ExxonMobil's board.
Wow.
And Third Point pressured Nestle to adopt more ambitious sustainability targets.
So even the biggest companies aren't immune to pressure from their investors.
Right. But it's important to note that the success of these campaigns can vary a lot.
Okay.
And we're even seeing some pushback against certain ESG-focused initiatives these days.
Interesting. So it's a constantly evolving landscape.
Absolutely.
So what seems to be the most promising path towards long-term sustainable climate action by M&Es?
Well, according to our sources, the key is strategic alignment.
Okay.
When a company's climate action is really integrated into its core business model, that's when it's most likely to be sustainable.
So it's not just an add-on, it's part of the company's DNA.
Exactly. And we see that with companies like Vestas, whose entire business is centered around renewable energy.
Okay.
Or Ecolab, which helps companies reduce their environmental impact. For these companies, sustainability isn't just a nice-to-have. It's a core part of their value proposition.
Yeah, it's how they create value for their customers and for themselves.
Right.
But what about the simple desire to be seen as a responsible company?
Yeah, that's another important driver, the whole idea of organizational legitimacy.
Okay.
Companies want to be seen as doing the right thing, and that includes taking action on climate change.
Makes sense.
And it's interesting to see how many companies are setting net zero targets these days, even in industries where the direct business benefits might not be obvious.
So they're doing it partly because they want to maintain their reputation and be seen as good corporate citizens?
Right. And aligning with societal values, which are increasingly focused on sustainability, can really boost a company's image.
Yeah, it can even attract talent.
Right.
Yeah.
Absolutely. People want to work for companies that share their values.
So in the long run, the most successful M&E climate initiatives are likely to be those that are both good for the planet and good for business.
Yeah, it's about finding that sweet spot where both those things are true.
Wow, this has been a really fascinating and thought-provoking conversation.
It has, hasn't it?
So just to sum it all up, M&Es have a lot of potential to drive meaningful climate action. Expert speaker.